Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, June 21st, 2024. Thank you all for being here. Ron Quaranta here with my amazing co-hosts David Brill, Josh Klayman, and our very special guests, the one, the only Steve Ehrlich, the Director of Research for Digital Assets at Forbes. Steve, it's good to have you. Before we begin, for the audience, again, my usual disclaimers, please keep in mind that nothing discussed is accounting, legal, investment, or tax advice. We're definitely going to be talking about tokens at some point. None of them are recommendations for tokens. And obviously, everything we're discussing are our own personal opinions and do not necessarily represent the opinions of our firms. We are live streaming on LinkedIn and X. If you've got questions for our amazing group, please do put it in the chat. We're happy to address it. Steve, welcome to the show. It's good to have you, buddy.
And thanks. Thanks, Ron, and good to see you again, Josh and David. We've all known each other for many years. I think it's probably better to date it back to when Bitcoin was probably sub $1,000 or $2,000. That seems to be a good reference point for people. So happy to be.
And the joke is, why didn't we buy more when it was sub 1,000? But we can talk about that at happy hour. Yeah. Steve, I wanted to start with you, buddy. There's so much going on in the news, and we all had kind of prep emails. And David and I and Josh joke about this often. Whatever we prep for doesn't matter because we've got to cover new stuff by the time we get here. But one thing that really stands out was the SEC dropping its case against Ethereum, dropping its Ethereum investigation. You know, Steve, when you look at the perch you sit in at Forbes and this kind of, when directing research across the ecosystem, what were your thoughts when you saw that news?
Yeah, so it was kind of noteworthy, but also I think a bit of a fait accompli. I mean, Josh, maybe you could correct me if I'm wrong, but I think what the SEC dropped was a suit into Consensus as part of its broader investigation into Ethereum. And my sense is that was sort of it was going to happen after they approved all the 19B4s, I guess, in late May, that will eventually lead to the listing of the spot Ether ETFs. It would just be completely incongruent thinking to continue to sue Consensus while allowing those products to list. But I also think that the market sort of expected that too. I mean, I think Ether only bumped up maybe 3 or 4%. I think it's down maybe a little bit after this, and it's kind of fallen a bit into the wash of just general malaise as people are looking at the ECB, the BOE, the Fed, wondering if and when there's going to be a rate reduction, maybe just one this year. And at this point, I think Bitcoin, Ether, and other assets are sort of languishing as they sort of digest the retail flow that went into the ETFs and await the real asset managers, the banks that I think we're all expecting to come in later towards the fall and winter.
Steve, thanks so much. Josh, David, weigh in on the news. We've chatted about it, and Steve, David and Josh get more text messages from me during a week than they ever wanted. But I'd love your opinions, and Josh in particular. This also doesn't change some of the other dynamics going on. In other words, Consensus still suing the SEC. You want to talk about that a little bit?
Sure. I mean, certainly I don't have any knowledge beyond what those, watching the press or watching Twitter or LinkedIn or other mediums or CoinDesk or Forbes, right? Any of these publications has. So I'll start with that. But I would say, as Steve noted, the termination letter relates to the termination of the Wells notice, right? Yep. And to the end of that investigation. The fact that Consensus is moving forward with its suit in the Northern District of Texas to get a declaratory judgment about the status of ETH, as well as for other purposes, I think that's still live and it's still important, right? As many have discussed, and as we've discussed in the past, the Northern District of Texas falls within the Fifth Circuit, and the Fifth Circuit has been, how can I say, not that into preservation of Chevron deference and things like that, as compared to perhaps some other circuits. And so questions about major questions doctrine, as well as, due process and things like that have been raised in the Consensus case, I think, there's a reason for them to continue. Because as Steve noted, the letter, while incredibly helpful, doesn't mean per se that any investigation about ETH at all has stopped. I do think it's a really great move, right? I do think, meaning the letter, the achievement of obtaining a letter, I don't think they're obtained very frequently, And I do think that for those who have taken a look at the letter that I can't remember her name offhand, but from Consensus, the person handling litigation, who she posted Wachtel's letter, right? The letter to the SEC. And I thought one of the really interesting things in there, of course, we always talk about how the CFTC believes that digital assets are commodities generally, right? But one of the things that was called out in that letter was it touched upon the ETF, the whole approvals around the 19b4 rule change and the discussion of ETFs, and said that actually some of that language, that approval language, had referred to an spot ETH ETF as being a commodity based fund. So I think that's super interesting. I think also when you think about the timing of the departure of David Hirsch, the SEC's head of crypto enforcement, who I believe had been at the SEC for about 9 years, I think a lot of movements coming at once, alongside what we see to be an increasingly important position of crypto in the elections. That was a lot for me. So let me pause. David, what do you think?
Well, I mean, we've talked about this a number of times, but I think that, crypto has, become a wedge issue in this campaign. And I do think that, Trump embracing crypto as an issue, and it's not clear what his administration would do with crypto. And I want to be clear about that. We hear what he says, and, it's not clear what that would translate to in his administration. But I think, it is clear that the Biden administration is reacting to that and taking steps to look at least more crypto friendly. And I think this is one of the easy wins that they could give to the, crypto public at large, to allow these to move forward and not to drag these out. So I think this was, I think there was some leaning in by the administration on the SEC personally. Not that they called me up to ask me for my advice, but that's my opinion. But I do think that this is a positive step move forward. And there is some second effect to having an Ethereum ETF approved, in that I think some of the wirehouses who may have been a little more circumspect about allowing their clients to trade a Bitcoin ETF, now seeing a second ETF go to market, and will assume it runs smoothly when it does start trading, which I think will be in early July to mid-July. I think that will also hasten the wirehouses' comfort with allowing their customers to purchase the Bitcoin ETF.
One thing I think that's important to note, though, and I'm curious what you guys think as well. I don't read this as a sign of the SEC getting ready to roll over on all the other suits and all the tokens that they claim to be securities. And I mean, like I've spoken with teams behind some of the larger cap tokens that don't fall into Bitcoin and Ether, and some of the smaller ones that still have 9-figure market caps. And I mean, they'll have 2 or 3 mining pools that essentially manage the network. And if you ask them honestly, they'll say that they are probably more centralized than they would want people to believe. So this was certainly a nice moment, a nice win. But Gary Gensler feels very strongly in his belief that most tokens, and probably at this point everything other than Bitcoin and Ether, are securities. And I wouldn't expect this to open the floodgates to Solana and Near and Chainlink and all the other ones that we're hoping for.
Yeah, no, I think, Steve, we sort of agree with that notion. We've discussed that previously, but we agree with that notion. I just think that the administration is trying to appear like they're loosening up on the space, especially prior to the election. I don't think fundamentally we think that their view is going to change longer term, but I think one of the things I think will be interesting is we know there's some other Wells notices out there. And, like, let's take Uniswap, for instance. We know the Wells notice is out there. Are we going to see litigation before the election? Will that just sit out there for a while? Like, will we see new actions being brought? I think there might be some way to allow the community to perceive that maybe they're taking a step back and enforcing new litigations and starting new litigations. But I don't expect them to roll over on any of the current ones.
David, Steve, Josh, I think we all widely agree on that perspective. I want to go back to something that Josh said, which was really interesting, and in the news was the resignation of the head of enforcement at the SEC. Josh, are you implying a causality there?
I'm not implying anything. Yeah, I don't know. I have no reason to know that there would be a linkage. I just think temporally, it's really interesting that that happened before what the SEC had to know would be a big announcement, right?
Yeah.
We've seen, of course, the debt box sanctions,
Yep.
and then really the if we want to think of it if we want to think more broadly for a second, we've seen bipartisan legislators rail against SAB 121, as well as certain other U.S. agencies like the GAO, and then we've also now seen this withdrawal of the Wells notice with respect to a big issue. So who knows? Maybe there could be some kind of connection there. I don't know. I don't. Let me just say, for David Hirsch out there, I, no reason to think that this is connected. Not trying to suggest anything. It's just the timing is really,
Yeah.
really interesting. May I just say one other thing about?
Yeah, of course.
You had asked me before about consensus continuing the case in the Northern District of Texas, and I think one of the things that's so important about that, and I didn't say this before, but it kind of ties into as well what Steve and David were just talking about. But a reason to continue that case, frankly, is certainty, right? It's not enough at this point, not that it was enough at a prior point, to continue to have a lack of certainty about about the status of ETH in the SEC's eyes. And even now, with the language of the termination letter, we may have our views on what that means, but there's enough wiggle room for the SEC that, as Steve noted, they could continue to investigate in other ways. So I think, frankly, having some kind of judgment on this point is really important. And while I agree with Steve and David, and I think you as well, Ron, that I don't think that this decision to withdraw the Wells notice as to ETH should be extrapolated to mean something about other live cases. I do think that perhaps the results of litigation in the Northern District of Texas about this could create some law or some interpretation of existing law that could be helpful to those tokens and token market players.
Yeah.
In other contexts.
Josh, I appreciate that. Steve, I want to go back to something you said, and I think we broadly agree. The SEC is not going to roll over. There are very firm, almost philosophic positions on the part of the chair and certainly some others in Congress. But I will say this, and I'd love your opinion on this, Steve. They are taking some hits. The other news item that came up that I was really interested in was, if I recall correctly, they went to the court in the Ripple case saying, I believe Ripple should be fined $2 billion, and Ripple said that's insane. And the SEC came back and said, well, how about $100 million? And Ripple said no. They are taking some hits. How long does that kind of bulwark against the industry last for the SEC, particularly with the election coming up?
Yeah, I'm not as familiar with the negotiations with I know that like with the Terraform case and stuff, like the exact dollar amounts going back and forth. I'm not quite sure how that all fits. And my thoughts on Ripple. I published a story where I basically called Ripple a zombie blockchain a couple months ago. So
I saw that.
But I mean, I guess there's a couple of thoughts. I mean, for one, I've sensed a growing trend just among the administration of having regulators, I think, be more willing to go out on a limb and perhaps even take cases that they might lose or have to backtrack a little bit. I mean, for instance, this is outside of crypto, but the FTC with Lena Khan, who's going after like Amazon and Google and some of these like really big like antitrust cases that perhaps other, I guess, chairwomen at the FTC may have avoided in the past. And I suspect that Gensler might fit into that. But also, I mean, there's just a lot of general disagreement too about how the law and crypto sort of fits. I know that we have our own beliefs. The SEC has their own beliefs. Congress is trying to figure it all out. And these are hard questions. And sometimes it's difficult to figure out actual resolutions. I mean, one thing I will point out, though, I've never spoken with Gary Gensler, but I did have, I believe, the first on the record interview with LaDon Stewart, who headed all those crypto investigations
Yep.
Ripple and Coinbase and Kraken and so on and so forth. And I did ask her, I mean, what is it like working with Gary Gensler, the staff? Like, do they hear all the outside noise? Are they aware of what's going on? And I mean, she said that they do hear, they do understand it. But at the same point, they feel very strongly. They have a strong conviction in what they're doing. And while people like us, crypto consumes probably 150% of our days, to the consternation of our families. I mean, at the SEC and the broader investing public, it's still a very, very small thing. So even if the SEC has to walk back a couple of these smaller cases, they see those as battles, as opposed to, I think, the broader war.
Yeah. Stephen, good point. David, Josh, Steve, I want to pivot a little bit. We can go down the regulator rabbit hole. We'll probably come back to it, particularly as we talk about the election. And Steve, if you're not aware, David Brill has this mystical kind of crystal ball where he makes predictions, and I lose every wager to David every time. But I do want to pivot a little bit. You know, today David is triple witching today, so I think it's a settlement of something like $5 trillion in equity and bond options and futures, which I haven't looked at the market this morning. But the Forbes go back long enough to remember the negative correlation conversation. Bitcoin and crypto are great because it's a negative correlation to the global market. It's really great for portfolios, and I think that story is well and nigh gone. David, you and I have had this conversation. What are you seeing in the markets? And I feel like, the rally's now over, or are we simply in a summer doldrums and let's get through past Labor Day? But David, let's start with you, and then Stephen and Josh. What are you seeing in the markets?
So I think we actually have a stealthy bear market in altcoins. If you've looked at the performance of altcoins over the past, let's say 30 days, there's been a large sell-off in a lot of the top altcoins. And so, especially outside of the top 5 altcoins, and you've really seen a stealthy sell-off, kind of a day after day, just sort of slow bleed. And I think you're just seeing a combination of, the sell in May and go away, but also just, I think there's been a pause and new money coming into the ecosystem, both like this week on the ETF side, where we saw, I think there's almost 900 million in outflows in the ETFs this week. And I think you're seeing a lot of the leverage getting taken out of the market. So I think this is sort of a healthy retrace a little bit. I don't think it's always up and to the right unless you're NVIDIA. And so I don't view this, I'm not concerned by it. I think that the ETH ETF will be a nice boost for ETH. But there are a number of, like the AI altcoins and some of the other altcoins that really have lost a lot of their market value. And so I think we're in this stealthy bear market for altcoins and sort of this, consolidation trading for, Bitcoin and Ethereum.
Steve, thanks, David. Go ahead.
Just to add on to that point, especially related to NVIDIA, the correlation I don't think is quite as high as, or the negative correlation may not be quite as high as it appears, especially if you take NVIDIA out of the S&P 500. I mean, I was reading this morning, I forget the exact percentage of the total gains that NVIDIA is responsible for, but I think more than half of the stocks in the S&P are negative on the year. And if you look at like small caps or look at the S&P like on an equal weighted basis, it's not nearly as impressive as just the actual index itself. And that kind of speaks to the broader macro malaise, notwithstanding everything that David, you just said about alts and that sort of stuff too.
Steve, to that point though, so what do you look at from a research perspective? If we take FANGs or the top 5 or whatever the big tech names are out of the index, from a research perspective, what do you look at to get a good gauge of the market? Because David and Josh and I often talk about, what's that trend line looking like? And occasionally we'll bring up technical indicators that probably don't matter. But from a research perspective, what do you and the team look at?
It's really tough. I mean, there's a couple of ways I try to do it. I mean, I'll look at the broad indexes. I mean, sometimes I'll look at banking indexes, the NASDAQ 100, the S&P tech sector. I mean, those are ones that I can kind of look for as a gauge, because sometimes you can see like nice points of convergence and divergence between the assets. But I'm not super big into technical analysis when it comes to looking at this sort of stuff, because I mean, even in traditional financial markets that go back decades, I mean, more than 100 years, CTA tends to, I feel like, is at best a 50-50 proposition, even though these models look really nice. And in an industry like crypto and I'll hear that it's gone through many cycles in its very short history. There's just not a lot of data still to go on. So I mean, when I try to really analyze the space, and one of the things I do is run an investment research newsletter. I almost take the perspective of a venture capital investor, where I'm not thinking like 3 to 6 months or even a year. I'm thinking like, what are the verticals? Like, what are the best projects that would be good to have in a portfolio for 5 to 10 years? Because the short-term movements are just really are just really difficult to predict, and I don't want to get into a position where I'm trying to chase the market or become a fortune teller.
So, Steve, to that point, and I wanted Josh to weigh in. Josh, if I could, just one last point to Stephen. You know, David and Josh and I, Steve, often talk about the really important conversations are what are the use cases, and the four of us, I think, broadly agree. There's a lot of tokens out there that don't really have a use case, but some really do have fundamental use cases that make sense. How deep do you and the team get on the use case analysis as well?
It's use case. It's an interesting term to kind of say use case, because I kind of see this as like infrastructure, and then also like applications and more like customer facing things. I mean, the infrastructure, I mean, can go anything from L1s to L2s to interoperability to atomic switches to oracles to all sorts of stuff. And we try to figure out, I mean, like, what would a mature tech sector or a mature crypto sector look like? And then at some point, like, who are going to be those winners? And in some ways it gets difficult, because it seems like every single L1 then gets its own set of L2s, and then its own set of interoperability protocols, and then its own set of oracles, and sometimes they try to branch out. But then the question is, how many of these do we actually need? And at some point, like, will momentum run out? But I mean, that is still, I think, a little bit more stable than the apps, because sometimes I get pushback because I feel a little jaded that we haven't really seen any consumer apps that have gotten mainstream adoption. And I'm not referring to like Bored Apes or like NBA Top Shot, which is very much down, but have that real sustainable growth. And I guess that's why we tend to focus a little more on the infrastructure, because it is a bit easier to predict. But from the app point of view, I still think that the industry is lacking. And sometimes I'll hear, well, it's only been around for, I don't know, 15 years at this point, 16 years, and Ethereum is much newer, and all the other ones are much newer than that. But it's really difficult right now, I think, to see apps that have gotten mainstream adoption. I'm curious if you guys think differently, because I've gotten pushback from this point of view. But
I think we agree with you, Steve. David and I often talk about the UX for crypto for the everyday person is just awful. But I want to go back to Josh real quickly, because I know, Josh, you wanted to weigh in with one thing, and I interrupted you.
Oh, it actually was slightly different. Like, it was continuing the conversation, but kind of asking you guys a question related to something that I think could be related, but we'll see. So we've seen in the past week, or just past couple of days, a lot of announcements about potentially delisting certain stablecoins like USDT and others. I think I've seen some mentions of DAI, or certain other ones that I won't mention, the whole list of, just to come into compliance with MiCA. We've also, at the same time, many people have seen billboards in Times Square relating to USDT more generally, at least I've been told. And so I'm wondering, do you think that those types of moves, like, on one hand, yes, this might be a boon for true one-to-one backed, fiat backed or liquid backed stable coins, but do you think this could have an effect, or could be having an effect, on the altcoin market or markets generally?
I'll let David take that.
So I don't think that's having an effect on the altcoin markets in particular. I just think that, by and large, some of the leverage is coming out of the markets, and I think that they are the riskiest, of the crypto ecosystem. They are the riskiest of those assets. I think there's sort of this view about Tether in some areas that they're more concerned about, and then in other areas, and I guess Tether doesn't sort of fit into the MiCA framework, but I don't think that's what's driving it. I think that's a sort of macro crypto issue. I just think that's an interesting sidebar that will need to play out over time, Josh. But I don't know. What do you think, Steve?
Yeah, I know there's always an interest in the correlation between sort of stablecoin market cap and then assets. obviously there has always been a direct correlation, and especially going back to Tether, there's been lots of research that I personally haven't been able to verify, suggesting that Tethers were minted out of thin air to boost up the price of Bitcoin. But personally, I think like the bigger trends are just, I mean, meme coins, alts, probably a little bit of exhaustion, but in particular, I mean, there's some significant sell pressures coming from Bitcoin. I mean, miners are selling to compensate for the loss of money from the halving. Also, I mean, if you just look at some of the, I think they're called like huddle waves, like looking at longer term holders, 70,000 seems to be a price point where there's a lot of selling, profit taking. So therefore, it's going to require additional momentum to push past it to get closer to 80,000 or potentially 100,000, and as goes Bitcoin, goes the rest of the market. So when there is that sort of exhaustion, I think Bitcoin right now is under 64,000. I think right before we. So I mean that's like almost 15% down from its all-time high around 74,000. So that's not an insignificant number. So to me, those are bigger issues than just stable coins. But Josh, I mean, to what you said, I'm really curious what's going to happen with Tether, because it does seem to be incongruent with Mica, and I'm not really sure what Tether at this point is going to be able to do. I mean, Europe is not its biggest market, but it is important. And Mica is the first major piece of crypto legislation from an advanced economy. So that is something I am watching closely.
To that point, though, Tether not staying quiet in all of this, and I haven't dove too deeply into it, but they just issued a new stablecoin, I believe, based on or pegged to gold. So, David, Steve, is this kind of Tether's way of diversifying away from potential risk in the future?
Well, I mean, having more products, I think, makes sense. Look, Tether has been exceedingly successful in growing, and looking at their business model, they make a lot of profit. So I think they have a lot of opportunities, but I think they'll be proactive in looking at what they need to do to change their business model or enhance their business model. But also they're like they've been a big purchaser of Bitcoin, and they've also announced, it was in a Bloomberg article, that they're going to be doing a number of investments in companies in the ecosystem. So I think they're diversifying, but it wouldn't surprise me if they have a game plan for dealing with Mica and some of the other laws that may come to market. But I think their main use is in Asia, and so I think that's the area they're most focused on. But I don't think they're going to give up Europe without a fight.
Yep. So everyone on the call, I just want to thank you all for joining us. We've got hundreds of folks across LinkedIn Live and X. If you've got questions for David, Josh, or Steve and I, please put them in the comments. We're happy to address them. Pardon me. I want to pivot to one thing, because Steve, you mentioned something that's really interesting. We're talking about, Steve, David, the kind of the crap coming out of the market bluntly, steam coming away from the alts, a little bit of the froth. We've got BTC below 66 or 65. But it is all investment horizon relative. And the reason I'm bringing this up is we've got Michael Saylor and MicroStrategy dumping over $750 million on Bitcoin in this market. So what's that longer term play then? Steve, what are your thoughts? You saw the news, I'm sure.
Yeah, I mean, I've followed MicroStrategy pretty closely, and it's one of those stocks, like its resilience does surprise me a little bit. I had expected, I mean, I forget the exact numbers right now, but I think its stock is trading somewhere close to like an 80% premium beyond like the value of the Bitcoin that it actually holds, and I guess how people would value its software business, which to me just seems unsustainable. Yet, like you said, they just, I think, issued a convertible note for like $250 million and used it to buy a whole bunch more Bitcoin. And I mean, the bet is that they're sort of, I guess, like a leverage ETF at this point. I mean, they were a pseudo ETF before January, and now people are trusting Michael Saylor and them to sort of accurately deploy their balance sheet so they can buy Bitcoin, I guess, at a lower price than where miners can mine it. And the real goal there is, I guess, like somewhat dilution of the balance sheet further down the line, and they're able to stockpile all this Bitcoin. It's an interesting play, but the premiums just seem so high. For one thing that I think it's worth noting, Michael Saylor's been very good at managing the balance sheet and the loans that he's taken on. I mean, he has years before he has to pay back any of that money, or decisions have to be made on conversions into stock. So he's not at risk of having to liquidate his capital or anything like that. I think at least until like 2025 or 2026. But that is one stock that has continued to surprise me, to be honest.
Steve, really good point. I want to call out David because yesterday we had our crypto asset working group meeting, and David said something that really reframed my perspective. David, if I'm misquoting you, forgive me, but as I recall, you had mentioned it looks like MicroStrategy is actually a Bitcoin holding company in the longer term. Why do you say that?
Well, look, I think ultimately we can't forget that, institutions don't have a lot of options on where to buy, Bitcoin and hold it. Right now, before the Bitcoin ETFs, MicroStrategy was really and the Grayscale product were really the two places where they could, own Bitcoin. And I think MicroStrategy, like Steve said, they've been very creative in how they've gotten cheap money to invest in purchasing Bitcoin and sort of, paying it back over years of time. So they're really able to get this leverage. And I think if there's a prevailing view amongst, the community that we're going to see maybe 100K before the end of the year, there's really a lot of upside in that stock. Being mindful, like Steve said, it is trading at a large premium. But no, that's the way I think about it. I think about it as really like a company that's like a Bitcoin holding company and has some other tangential assets in the company. And so, people want exposure to it. And that's one way to get exposure to Bitcoin.
Josh, weigh in on some of this. And I know you certainly can't talk about specific clients, et cetera, but when you look at your client base and how they're coming to you, to the extent you can speak about it, are more and more of them interested in crypto broadly? Are they interested in having crypto on the balance sheet? Are they new projects with interesting use cases? What are you seeing in the landscape that you survey?
I mean, what I would say, my client base is very broad, right? And generally, if someone is coming to me, it's because it's something to do with emerging technology, right? So what I would say is that a lot of projects that may have been moving very slowly for a period of time have really moved to the fore, and there's more of an urgency to go to market. I would say certainly I think there's great interest by many in introducing in the US by large institutions the kinds of products that have been launched outside of the US, whether that may involve, as we've talked about in the past, digital bonds or frankly, stable coins, other sorts of things from players that you might not expect, but where there's really a very intense focus on this kind of stuff and on tokenization, I would say. But a lot of what I see continues to be, the intersection, frankly, of digital assets, AI and data, and gaming, video gaming. So I think, yeah, I think gaming seems to be one of the big winners.
Josh, thanks so much. So Steve, David, Josh, in the backdrop of all of this, one of the interesting things we often talk about is kind of the froth getting out of the market. And just when, post FTX, we were hoping that the crazy has gone away. And then, of course, the other day I read that who shows up in the crypto world is Pharma Bro, which is an entirely different kind of conversation. David, Steve, are we on the cusp of a new wave of this, bluntly, these crap coins, I won't use the word, and these token offerings that are tied to either presidential candidates? Are you concerned about that kind of speculative fervor?
Steve, I'll let you jump in first on this one.
Okay. I have some strong views about this. Again, I've been involved in crypto in one way or another since 2012. So I've been in the space, I guess my tenure is approaching its bar mitzvah. And I understand that it takes time for products and services to get proper use cases. I can accept that, especially in DeFi, which I think is the most widely adopted type of application. A lot of it is related to yield farming and speculation and trading, and a lot of the movement on stable coins is also related to capital allocations and trading, and that's fine because we take time. But I understand. I get annoyed when I see applications and users that are claiming to do something good, and it's really just a rug pull or a tool for speculation. And in some ways, it makes me wonder, how long are we going to have to wait for one of these big use cases? And then we come to meme coins, which don't even pretend to provide any sort of use or value to the consumer. And the exchanges that list these tokens literally say, we can't vouch for any utility here, and these things are incredibly volatile, and their price only depends upon what someone else might be willing to pay for them. And meme coins have become a $50 billion plus industry. I mean, I get that a lot of it is tied up into Dogecoin and SHIB, but I mean, to me, it just suggests that there's something very broken in financial markets if this is what the youth has to turn to, for whatever reasons. I mean, they think that they'll never be able to save enough money to buy a house. They think that the financial service system is rigged against them, and that buying these meme tokens is just as likely to provide value than as buying a lottery ticket, which is better than putting money in a savings account that pays like 1% interest or whatever it does now. So, I mean, to me, I guess I just have broader thoughts about meme coins, but I really wish that they did not exist.
So, David, I probably shouldn't joke with Steve about the Shiba joke you and I have going
No.
on for the past 2 or 3 years. And Steve, I think we broadly all agree with you. But David, it asks a larger question, which is almost a generational question. And to me, it's a frightening question following on from what Steve noted, which is the greater fool theory now an investment strategy for an entire group of people?
You know, I have to say, Steve, I go back and forth on the meme coins, but generally I agree with you. Like, I'm of the view if people want to put these out in the market and people are willing to buy them, that they should be able to do that. But I do think it does take the seriousness of the ecosystem down a notch when people, you know, speculate in them, talk about them. I do see a place where meme coins could turn into sort of social tokens, and where I could see artists having their own token, and that could give them benefits, you know, owners benefits, and maybe buying concert tickets first, or, you know, being in priority for that, maybe getting, you know, cuts of records that other people wouldn't get. Or I really could see an ecosystem that develops around a social token. Again, not for politicians, but I do see that in a sort of maybe, you know, athletes, you know, rock stars, or, you know, people in the music industry. So I do see an evolution in my mind where it evolves to that. But I think its current iteration is like you said, sort of a lottery. And my sense is there's a small cohort of people who are in the know about when these are coming out and, you know, profit from them. And a lot of people are just their exit liquidity. So that's kind of my sort of view of them.
David, you're weighing in, though, just to be clear for the audience, we're talking about the non-fungibles. We're not talking about the Shibas of the world, for example.
Yeah, I mean, there is, look, Shiba and Doge do have some, you know, they do have some utility to them. But I mean, look, it's, you know, sort of like political meme coins, you know, that just sort of, it's sort of hot money, you know, chasing something. And I would rather see more evolved offerings on our ecosystem. But I wouldn't discount, one last thing, Josh, I wouldn't discount this social token idea, because I really see that evolving into something, you know, in the longer term.
Josh, go. Thank you, David.
Yeah, no, so I don't disagree with you guys. I do think that there are really good things happening in the financial markets, though, with digital financial market infrastructure. You know, we've heard the announcement about the RSN proof of concept that's being worked on. We have gotten updates through time over Project Agora and what's happening with the Bank of Institutional Settlements, things like that. So I do think of international settlements, excuse me. And yeah, and just, so there are big moves, I think, that could reshape finance generally, not even just crypto. I do think, you know, I have a lot of, I share a lot of your views with respect to certain types of tokens like meme coins. But I do think also that it's, you know, to the extent that there's excitement in the market and that, you know, that people are seeing positive momentum, I think we're going to have those things. I'm not saying that we should. I'm not saying that they're like a public good or a social good. But I think that's just more of a, as long as you have something that's going somewhere, there are going to be some players, regardless of industry, that are going to try to make a quick buck, right?
Yeah, I would agree. And sorry, Ron, but
no, go for it,
David. I guess I didn't necessarily mean to lump Doge and SHIB into like all like the however millions of meme coins that have been created. I mean Doge has been around forever, and I think that like in some ways it has become a bit of an established meme coin. Like I accept that it exists, and I think that there's a role for it. And SHIB I actually find pretty interesting. I actually wanted to do a story on them because they're trying to go legit and create a whole blockchain and an actual ecosystem around it. So that one is interesting to me, but the others, and I'm someone that appreciates a good meme. If anyone follows me on Twitter, it's usually about sports. And I mean, Ron, you know me long enough. Any discretionary income I have is usually spent on a Eagles or Phillies jersey. So like I get the idea of spending money on things that aren't going to provide a value, even though I argue they do increase in value the same way my wife argues that her ring keeps increasing in value along with any other jewelry I buy her. But yeah, the other ones, it's just I see them as just a cry for help. Honestly, it just, and I really wish that there was something better that people could put their money towards.
That's a really interesting point, Steve, and I agree with you. I'd love to have that Shiba conversation as a total joke, but an aside, I'm pretty sure David thinks I'm the single largest individual holder of Shiba. I'm not, but we joke about it too much. Steve, I want to give you an opportunity if we could. There's a lot to cover. We could go on for hours, and I can listen to the three of you talk. But Steve, I do want to give you an opportunity to plug a little bit of the work. As director of research at Forbes, I think there's fantastic work that's happening there. Tell the audience where they can find some of the research, what they can look forward to, and what types of research you're doing there with the team.
No, thanks guys. I won't take too long. But yeah, we do a lot of really interesting stuff at Forbes here. I mean, I lead most of our editorial coverage related to crypto, feature stories, some breaking news stuff. But we also have some really interesting, more investment focused products in a non-official, non-financial advice type or point of view. I edit a premium research newsletter called Forbes Crypto Asset and Blockchain Advisor, where at least once a month I send out a glossy 25 to 30 page PDF, like covering my own thoughts. It lets me sort of editorialize on the market in a way that I can't for stuff that just goes on the main website, including certain suggested portfolios, and always like a very high level Q&A exclusive interview with a senior policymaker, executive, so on and so forth. And we also have, aside from the regular Forbes contributor model, I also run my own cohort of contributors where we actually take news and create these reports that are called like FDA Forbes Digital Asset Special Reports. You guys probably know, like I used to be an intelligence analyst for the Defense Department, and I sort of modeled these reports off of what I used to do there, where I'll take something, some piece of news, and we'll sort of go through we'll sort of go through the questions that senior decision makers, hedge fund managers, chief investment officers, whatever, like what are they going to think about next? Like for instance, one story that we did when the grayscale discount was still narrowing in anticipation of the Bitcoin ETF portfolio, or excuse me, the Bitcoin ETFs coming to market in January last year. We looked at all the other grayscale products because they had 12 or 13 and looked at their various discounts and premiums and sort of helped investors understand what they should think about those and how sustainable are they, and are there ways to sort of buy these assets at a discount. So that's the type of stuff that we do, but we really try to cover as much of the market as we can.
Steve, thanks so much. We'll include for the audience the links that you have available in the show notes. We've got a couple of other topics, but I do want to open up for the forum. David, I do want to ask you one question and open it up to the wider group as well. You and I have been talking about BTC spot ETF outflows. I guess the question I've gotten, I think I saw the newest data point was 900 million in outflows. Where's it going?
It's really interesting. I think that there is some, sort of hot money that has gone in this. They've made some gains and they've taken some out. And there might be some rebalancing that's going on. We're getting towards the end of the quarter and maybe some people are trimming their positions and moving them around. It's a good question though, Ron. I think that, look, Bitcoin's still up, I think 60% year to date. So, there's some people who, have gotten in, they've gotten a nice gain and they're going to the sidelines. But look, with the amount of money that's gone into it, it's natural that we have some retracing here and there. So I don't really see too much into it. And then maybe there's some of the, sell in May, June and go away. And they're going to go away and revisit in September, October. So that's my guess.
I'm hoping David would take out his crystal ball. I've got this thesis that after Labor Day, things will get really, really busy. I actually don't think we'll see the bump from a spot ETH ETF that I believe David sees. Steve, Josh, do you agree with me?
Josh, I can go first.
Go ahead.
Yeah,
Steve.
I don't necessarily think so either. I mean, going back to your first question, Ron, David. I mean, I don't think that money's going to altcoins. I mean, it obviously
Right.
is. So, but related to ETH, I'm also a little bearish on it. I mean, I know that even if you just take like imagine a percentage of ETH's market cap to Bitcoins, and you could probably find a way to talk yourself into like single digit billions of dollars going into ETH ETFs by the end of the year.
Mm-hmm.
But I think it's important to remember just some perspective here on how new this industry still is, especially to the people with the real money. I mean, for them,
Right.
Bitcoin is still very it's still very risky. I mean, it has what, like 90% volatility historically. Like I mean, that's an insanely risky asset for anyone to put in a portfolio. And I think we're finally getting to a point. I was on a panel, I think earlier this week, where someone said sort of like the whole IBM adage, like you can no longer get fired for suggesting Bitcoin, and maybe that's true. But Ether, I mean, to me, that's Bitcoin is probably enough for most risk averse asset managers. And then when you get to Ether, it just leads to a whole bunch of more questions about the narratives and the use cases. And I think, in my opinion, all the different competitors, I mean, not just the Solanas and Polkadots and whatever, but then also all the L2s. And Coinbase now has its own L2. And theoretically, like that's making a lot of money. You could buy that and get exposure to the exchange. And then on top of that, what are the real use cases that people are actually using Ether for, Ethereum for, or any of the L2s? Beyond DeFi and some other stuff, is that really sustainable? So it just leads to a lot more questions that investment advisors are going to have to answer. And I'm sure they'll be ready, but they're going to have to convince clients that it makes sense to do this, and more than just a token amount in their portfolio to actually see meaningful traction in any of these products.
Steve, who are the money holders you're talking about in this space? Because David and I have been talking about this for a long time. Are you talking pensions? Are you talking endowments? Who are the folks, the large money sitting on the sidelines who still don't understand?
I'm talking about just like, I mean, the RIAs, the big asset managers. I mean, I feel like pensions and endowments that in some regards are actually a little bit, I mean, it's probably not that hard. You disagree. If you find someone that has conviction, like their investment horizon will let them allocate towards some of these products. But like the ones that manage the 401ks, the mainstream investors, like they're the ones that are going to have to answer for the performance of these products.
Fair point.
Yeah.
Thanks so much, Steve. David, Josh, go ahead, weigh in, please.
Oh, I was going to say, so I don't have a specific view on whether there will be a bump. I am very curious to see what the effects will be of the spot ETFs and other, to the extent we see more and more, what the effect will be of large chunks of ETH not staking, right? And what kind of effects that may have on the free-flowing ETH or other ETH that is staked. So I think that could be very interesting to look at. In terms of institutions, though, I think one thing I just wanted to mention was Standard Chartered's announcement, I believe today, that it's going to enter that it's setting up, or that it is launching rather, a spot Ether and spot Bitcoin trading desk. So it will join, in terms of global banks, I believe that others like Goldman have been trading crypto derivatives for some time, but this is one of the first, if I'm not even sure what other ones do already, of the global banks that do have spot Bitcoin and spot Ether trading desks. But I don't know.
They all call David for liquidity. It doesn't matter, Josh. If you need to find out, ask David. And for the record, in my mind, I keep calling it free range ETH. I'm not sure why I keep doing that, Josh. But as we round up, Stephen, thank you so much for joining us. David, Josh, there's so much more to cover. Obviously, one of the things we're focusing on, David, is we're doing our annual event later this year. And I think it really does touch on so many of the things that Stephen and yourself and Josh are touching on, from the legal perspective, from the markets and trading perspective, particular focus on the institutional stuff. But David, from the beachfront compound in Florida, when you're not tooling around in the Bugatti, what are you going to be looking at in the coming week?
Well, I mean, I'm really going to kind of keep my eye on the stealth sell-off and the altcoins. And, I'm expecting that the S1s, the revised S1s will be submitted today. And I'll be sort of looking to read and see how long that may take. And I still have a thesis that in early July to mid-July, we'll start seeing trading in the ETH ETF. So I'll be doing some reading, and as Josh has said, just my day job has been very busy. There's a lot of activity. A lot of companies are looking at kicking the tires on different investments in the space. So my day job will be keeping me busy as well.
David, thanks so much. Josh, what are you looking forward to next weekend? I know it's a lot of reading and a lot of work, and everyone on this live stream is super busy. And Josh, the one thing I'll add to that also from the vineyards of New Jersey where you reside, what are your thoughts on like the cases moving forward? We've seen some news on Ripple, and I know there are some things you can't talk about, but do you see any of those moving faster than others?
So that's a great question. I don't know about the speed. I think I share some of David Brill's thoughts about, will certain things be a little bit quieter in advance of the election? I am really curious. I want to catch up just because given some meetings and stuff, I didn't get to listen in to the Kraken oral argument, which I believe was today.
Yes.
So I definitely want to listen into that. I also, while I'm thinking of it, the person whose name I had forgotten at Consensus is Laura Burkover, who I believe heads up their litigation. So shout out to her for great work. But yeah, I mean, it'll be interesting to see. One thing that I'm focused on, or rather I'm seeing a lot of, is in addition to a lot of folks looking for token warrants, I'm seeing a lot of equity deals, right? Where there are equity offerings or even equity exchange deals. I think there's
For
a lot.
M&A, sorry to be clear. For M&A?
Digital asset space, yes.
Yeah.
But I would say there are, rather than in the past, I saw a lot of token deals, right, where people were using tokens in connection with these activities. Now I'm often seeing equity. Apologies, my children have not yet started camp. They will start next week. So the only other thing, two other things, I heard about a really good book that I read about on, so far only on Wikipedia, but it was mentioned. It's called Why We Sleep, and I really want to read it. It looked really good, and I've heard great things about it. And in terms of other things for this week and this weekend, I have a birthday party for one of my children tomorrow. So
nice.
Other than that, I'll be catching up on reading. And Steve, I'm going to look into some of the articles that you've been mentioning that you've been covering.
Absolutely.
It's piqued my interest.
Josh, thanks so much. Steve, thank you so much for joining us. When the Forbes Gulfstream lands in Philly, what will you be spending the coming week doing? And are there any special reports or things you can cite coming up in the coming weeks or so that you'd love to share?
Well, no, I mean, the next issue of my newsletter will come out next, probably middle to late next week. But I mean, as far as like what we're really paying attention to right now, I mean, this probably isn't a novel idea, but I mean, the idea of miners pivoting towards AI, and whether or not that's going to be a way to compensate for the reduction in the block reward, and as sort of like the runes and ordinals and that sort of stuff dies down a little bit. It certainly makes a lot of sense, but there's also some very real hurdles that miners have to go through to actually be able to support like high performance computing. So I think we're going to have one story that's going to sort of break that down miner by miner to help people sort of understand what's going on there. And I'm very curious like what's going to start happening with the election. I mean, it's hard to know. I mean, we touched on it briefly, like, I mean, with what Trump how he feels about crypto. I mean, he's done a complete 180 compared to what he said when he was president. A cynical person could say he just wants crypto money, and obviously in an election it's going to be this tight. Like any amount of donations, or even 10,000 or 5,000 voters in one particular state or county could make a difference. But for what it's worth, I mean, he's taking a position that's forcing Biden and the administration to at least respond to or start to seriously consider. And I think that will pay dividends down the road in terms of friendly legislation for the market. Probably won't happen. I think Chris Giancarlo told me recently that nothing happens in Congress after July 4th in an election year, but maybe in the lame duck session or potentially in the new year, regardless of who wins the presidency. I mean, there's two Democratic senators that are fighting for re-election in Trump country, and if they lose, that could certainly tilt the balance a little bit too, especially if it's Sherrod Brown in Ohio that loses.
Steve, thanks so much. Josh, I know you've got one more question for Steve. Steve, you can't get away. Go ahead, Josh.
Sorry. Well, on prior sessions, like prior crypto roundups, we've talked about Fit21. And I was just wondering, Steve, do you have any thoughts from your vantage point about Fit21 in general?
Yeah, I mean, I think it's a really good, I guess, like reasonable approach to providing clarity in the market. I mean, I like that for once it could clearly give spot commodity oversight to the CFTC, which is something that just hasn't necessarily been the case in the past. I mean, I know what people say is that commodities tend to be more institutionally focused, and this might be the first time that like retail traders are really getting involved in commodities, but I'd like to see that. It's going to give the CFTC more authority and hopefully more funds. I also appreciate that there are some litmus tests to determine when something is a security or not a security, like I think the 20% threshold, that like someone can't own more than 20% of the tokens or have governance control. And it's really interesting because we actually did have one story come out. I co-authored with our director of data and analytics, Javier Paz, although he's the one who really did the work, and I just helped, and in conjunction with a really terrific, and I actually like to shout these guys out, a really terrific crypto forensics firm called Grey Wolf based in Canada that we've worked with very closely, and they are just outstanding. We found out that BNB, the $90 billion exchange token, CZ owns 64% of it personally. And no one had actually been able to come up with those numbers before. Wow. And clearly something like that would be a security, which the SEC already thinks it is. But I think Fit21 is a really good, reasonable approach to providing clarity in the space. And I'm interested to see what's going to happen. The Senate hasn't really taken it up yet. I know there's the Lomas-Gillibrand bill and some other stuff that's happening there, and it's going to have to all be reconciled. But the other thing that I guess I'm optimistic about is that unlike SAB 121, Biden has not threatened a veto on any of this so far. So fingers crossed, right?
Yeah.
Steve, thanks so much. It was great to have you. You'll have to come back. David, Josh, thank you all. I'll leave off. Steve, I do this too often to you, David and Josh, but I've got my book recommendation. I'm going to do it because Josh just did it. I just finished a book, totally not crypto related, called 1,000 Miles to Freedom by a family that escaped North Korea. And it put everything in context for me when I realized I'm sitting here complaining about Gary Gensler and meme coins and Pharma Bro. That book will reset how you look at life. So it's definitely worth the read. Steve, again, thanks so much. It's great to see you all. We'll be back next week. For everyone in the audience who joined us, thank you so much for your time. If you've got additional questions for Steve or David or Josh, please email us info@wsba.co. Have a great weekend, everyone. Stay cool. It's hot in a good chunk of the U.S., and we will be back next week. Thank you, everyone.
All right. Thanks, everybody.
Bye-bye.
Thanks.